Volume indicator Forex strategy. So we have a big problem when it comes to trading Forex and looking at volume. And that is a huge problem because, in my opinion, volume is more important than price action. In fact, you might want to check out one of my other videos that is called Price is a Lagging Indicator. Some people thought that was just clickbait, but it really isn't. It's literally the truth. Price is just showing us what has already traded. Volume is the money. And that's what's important in trading. It's the money coming in, the money going out, better known as supply demand. And that's what makes markets go up and down, is really the supply and demand. By the time the price is printed, it's already done. That's why it's lagging. It's not helping with the future. What helps us with the future is to see, okay, where is the buying pressure? Where's the selling pressure? And that helps us know what might happen after we enter a trade, which is what we have to do in real trading. We're trading on the hard edge of the screen. So what happened in the past with price action? Well, we can trade an uptrend, but will it follow through when you enter? After you enter. And so what we need to look for is buying pressure. All right, so the problem with spot Forex is that there is no central exchange for it. And therefore, when you're looking at volume, such as we have printed down here at the bottom of the chart, what you're really seeing is only some of the volume being traded on the spot Forex market. And that volume is, well, whatever data feeds that you're subscribed to, and usually it's through your broker, sometimes the multiple feeds, etc. But again, the point is you're not seeing all the volume. Now, what does that literally mean? It means you're not seeing all the money, and money makes the markets go round, supply demand. So you're only seeing part of it. And so how helpful is that really when you're not seeing all of it? It's not very helpful at all, frankly. That's the answer. So is there a workaround? The answer is yes, there is. And that's what I'm here to teach you today. So let's switch over to a dual chart, and I'll show you exactly how to work around this problem. So the workaround is very simply that we're going to also look at the futures market of Forex. Now, when most people talk about Forex, they are referring to spot Forex, and Forex really is beyond spot Forex. So the spot Forex is one subset of the Forex market, foreign exchange, but spot Forex is not the only type of Forex there is. You've got futures, foreign exchange, you've got ETFs, foreign exchange markets, but when people speak of Forex, they normally are talking about spot Forex, and that really is interesting to me because it's not the most accurate way to read the Forex market, especially when it comes to volume. Now, the price action will be very similar. So if you look here, we've got, here's our spot Forex is on the right, Euro US dollar. And then, of course, you can see here that this is the Euro FX futures market. Now, the futures market does trade through a central exchange, and therefore, we can have a central source of volume. Now, when we look at it, okay, does it really make much difference? Are there different volume patterns? Well, I think you can see right away that there certainly are. So when we look at, let me bring up my little drawing tool here, and I'm a horrible artist, but you can see that we don't get, we don't get some big spikes and dramatic moves. I'm just going to kind of outline this here, all right, on the spot Forex, but on the futures, we sure do. Here we got this, it's kind of low, and then we get this big spike here. But we're not getting that matched over here. And then again here, we get a big spike here that really stands out, so I'll just kind of draw this here. And then again, boom, big spike of volume there, and then it levels back out a bit. But we're not seeing that correlation here. We're not getting these big spikes is what I'm talking about. So let me use my crosshairs to show you what I mean. So right here, hopefully you can see the crosshairs across both charts and where they line up. So where we get that big spike on June 10th, we get a very clear volume spike on the futures contracts. And that then leads, as you can see, right after that, boom, the market goes crashing down. And as I said before, price doesn't break down immediately And that's why I like to look at volume. We got big pressure coming in, and boom, down she goes. But if you look at that same spot, that same vertical line on the crosshairs of the spot market, you don't see that huge volume there. In fact, the big volume doesn't actually come until there. I'm going to move my crossover here, but that's pretty much after the move. Right? The move's done. That's after the move has done. And now, well, that's too late. We don't want to trade a lagging indicator. And so they're different. I'd rather go with the Forex of the futures market and look at that volume. Again, where's the next spike? The next spike is here that we see. And again, market comes up, okay, boom, and then we see, oh, big selling pressure. Again, prices come down a little bit, but not a lot. It does eventually go down a lot. It goes down tremendously. But if we look at the big selling pressure as indicated by volume here, okay, again, let me just hold that even there. Now, if you look at the crosshairs over on the spot Forex, not a lot of volume. We do not see that volume spike. And so for my money, pun intended, I'd rather look at the volume on the futures market. Now, you don't have to necessarily trade it on the futures market if you don't want to. Personally, I like to. And there may be, I'm not a tax expert, but talk to your tax expert, and there may be some, depending on where you live, and all kinds of, they never make taxes easy for us. So that's why I'm not giving you any recommendations on that other than to just say you may want to talk to your tax professional about whether there's benefits in trading the futures Forex instead of that spot Forex. I personally do prefer trading the futures over the spot. But if you like the spot Forex, you can look at both. Just like this, you can put them side by side, and you can go ahead and trade the spot Forex if you want to. You can execute your trade on the spot Forex, but watch the volume on the futures. Now, of course, that's huge. I'm a big believer in watching volume. There's nuances. This is the only thing I'm going to focus on today is with the Forex market. The other thing that we look at is timing. So sure, big money comes in, big pressure, selling pressure, buying pressure, and that's what makes the markets go up and down, of course. And we want to see the professional money coming in. Professionals have a lot of money, so when big volume comes in, that can be an indication that, oh, big money's coming in. Big money is professional money. Big money is smart money. And what would you rather trade with? The smart money or the, well, let's be polite here, the unsmart money? Okay, to be nice. So I can see that on the futures. Can't see that on the spot market. So we also want to use timing with this. Now, timing is one of those things that a lot of people don't talk about anymore, which is just crazy to me. So we use that, but it's not the only tool we're going to use. So yes, we use price patterns, and yes, we definitely use volume, but we've also got to use cycles. And cycles is, well, what we measure down here. Very few people talk about timing the market. So down here we have time, right? This is a daily chart, so we've got months down here. If you're using intraday chart, it's still time. It's just minutes or hours or whatever you trade. But that affects the market. It's a two-dimensional object. We got our price up here, and we've got time. And so if you're missing out on time, and so many people they're not even aware that time affects price action. And that's in the study of cycles. So I'm happy to give you my cycle indicator if you'd like it. Just go to indicatorwebinar.com. I've actually created a little tutorial on it where I actually give you the cycle indicator. It's a modification of a common indicator, just for full transparency. But I show you the modification, and I go beyond that, and I show you how to trade it. And that's all free. To my viewers, I give you that for free. So go check that out, indicatorwebinar.com. Also, if you like this video, please subscribe to the channel. Got lots of great tutorials. Be happy to notify you when new ones come out. Just subscribe to the channel. And by the way, if you have any comments about this video, please type them in the comments below.